Hello, everyone. It's me, John Glougie again, portfolio manager with Luft Financial. Also wear the insurance hat, and again, doesn't make me many friends, so why do I keep bringing it up? Because we're here today to talk about the next chapter in our exciting journey about risk management. In today's video, we're really going to hone in on one specific form of risk management, and that will be critical illness, or as we like to call it, portfolio insurance. What do we mean by portfolio insurance? Well, again, if you've listened to our previous videos, you'll know that for us, we know people set aside money in their RSPs or their TFSAs or non-registered investments for all sorts of different goals that they're trying to achieve. And I would argue that not one goal is to make sure that I have money set aside in case I have a heart attack. So if we do get sick, we have to ask ourselves, we may have access to money, but what was that money earmarked for in the first place? Again, my guess would be something fun like retiring at some point, or maybe buying my first home, or making any major purchase, taking vacations. They all sound better than sickness. But if we do get sick, it's very important that we help create a safety net underneath not only us, but our portfolio to make sure that we're not dipping into it and compromising our other goals in case of an illness. Another way to think about this is think about the other insurance that we buy to protect our assets. We likely all have car insurance, especially if we have a car. Why? Well, we don't really have a choice, but it's there for a reason. What about house insurance? What if my house gets broken into? We all have house insurance, but I would argue not all of us ever have to use it. Well, do we all have cancer insurance? Because I would argue all of us, whether we've been touched by it personally or we've known someone who has, we all know someone with some story about cancer or heart attack or stroke or some sort of illness. In fact, I'm not sure if you know this, but roughly 3/4 of all critical illness claims in Canada come from cancer. It's very prevalent. The good news is people are beating it and living a little longer. So we just want to make sure that we have a safety net that gives us access, quick access in fact, to a tax-free lump sum benefit that can help us pay the bills, fly family out to be close to us while we're going through the treatment. They really don't tell you how to spend the check. They just write it to you as long as you're sick. So what exactly is critical illness insurance? As I just said, if you get diagnosed with one of the covered conditions, roughly about 25 covered conditions, it's like being in high school and getting a doctor's note if you're sick. You go to your doctor confirms that yes, in fact, you've suffered this ailment, submit that to the insurance company, and they write you a tax-free lump sum check, and they don't tell you how to spend it. Now, there's moving parts to these policies, and you may decide to have a permanent critical illness insurance policy, one that will be with you forever. You might decide that you only want the coverage until something like age 75. You get to a certain age, maybe you're done with the coverage at that point. You've made it that far. What I will tell you, what makes this insurance fairly unique is that you can add what's called a return of premium rider. Now, what is a return of premium rider? For an additional cost, it's a rider you can add to your policy that says, hey, if I never get sick, I pay into this policy every month for several years, if not decades, and I never get sick, I want all my money back. And you can get it back with a return of premium rider. So think about it this way. We don't have to necessarily have $50,000 set aside just in case we get sick so we can use it. What we do instead is we take a small monthly premium, a small monthly incremental cost, and that gives us the $50,000, as an example, safety net underneath our portfolio. At some point in time, we might look back at this policy and say, you know what? I've lived a good life. I've had this policy and safety net under me for as long as I can remember. I don't know that I necessarily need it anymore, or I don't want to pay that monthly premium anymore. You cancel your policy, they give you all of the money back, and now it's almost like a forced savings plan. So if you think about critical illness insurance as part safety net and part forced savings plan, it makes it fairly unique, and I would argue less depressing than most insurance policies. One thing you need to be cognizant of, though, if you are applying for critical illness insurance, or any insurance for that matter, is it's a pretty negatively selective industry. And by that, I just mean if you're young, you're healthy, you're not thinking about this stuff, you think you're never going to get sick, apply. because insurance companies are going to agree with you and say, yes, you are young, healthy, and probably not going to use this stuff. Therefore, it's not going to cost you a lot of money to carry these policies. And along those notes, you also need to consider this. When they are underwriting you for a critical illness insurance policy, in other words, when they're putting you through the medical hoops, so to speak, they are not only going to look at your health, but they're going to look at your mom, dad, brother, sister's health. And they're going to try to identify if there are any hereditary issues that may prevent you from getting this insurance. So again, take it one step further. If you look at yourself in the mirror and say, I'm young, healthy, and not going to use this, great. Look at your mom, dad, brother, sister. Are they healthy? If the answer is yes, get the insurance before anything bad happens to even them. So if you want to know any more about this magical critical illness insurance, please feel free to let us know. I'd be more than happy to talk to you about it. Thanks for tuning in again today. We'll see you soon.